Yeah, today really, Seema, is day one of the next leg of the energy crisis. It's a European energy crisis, but could it soon trickle over to Asia or even the United States? Let's find out and bring in our friend Helima Croft, RBC Capital Markets, obviously CNBC contributor as well. Helima, we should be in Vienna. We're not. OPEC did the virtual meeting. I'm here because there's so many stories to tell around sort of the European story. Isn't it fascinating, Helima, that there is what, a 0.3% odds that China will basically announce it's going to reopen and thus use more oil on the exact same day the European Union sanctions and the price cap kick in? Isn't that just a shocking coincidence?
I mean, shocking coincidence, but here we are, Brian, and this is the really big day. This is the launch of the European seaborne oil embargo, the launch of the price cap plan. You know, you cannot get any Western services now to move Russian barrels anywhere in the world if you pay above $60. And the key factor to watch right now is, will the Russians make good on their threats to withhold supplies to any customer that pays at the cap? So we are watching very closely. The Russians have cut off, gas importers who would not pay in rubles. They have a real track record of disruption. Will it carry over to oil?
Yeah, and I hate to read something. I'm going to read this tweet from the Russian ambassador, by the way, in Vienna, Austria. Starting from this year, I think he meant day, Europe will live without Russian oil. Moscow has already made it clear that it will not supply oil to those countries who support an anti-market price cap. Very soon, the EU will blame Russia for using oil as a weapon. So the European Union today sort of sanctioned Russia, but also in a weird way, Helima, did it not also kind of sanction itself? Because what people don't realize is that Europe is still using, what, maybe 1.5 million barrels of Russian oil per day? Maybe more if you count pipelines into Germany?
Yeah, we estimate it's around sort of 1.2 million barrels because seaborne imports have been declining. The question is, with such a threat, is Russia going to cut off now all pipeline imports as well? I mean, you have countries that received exemptions, Hungary, a number of other landlocked countries. The question is, Germany and Poland have said they will voluntarily stop pipeline imports before the end of the year. Does Russia cut them off sooner? And again, the real question is, does Russia withhold from other markets? Now, Japan has come out and said they will abide by the cap. The Indians have said, though, they're going to continue purchasing. But can India purchase at these levels if they do not get Western services, shipping, insurance, reinsurance to basically get these barrels? So that's going to be the big question. Can Asia continue to purchase barrels at this level if they do not secure Western services? And the Russians are saying, no, if you do the cap, no Russian oil.
And part of our story today is also going to be this sort of secret oil navy that Russia's been building up. We saw documents. We have actual sale transactions for these old super tankers that undisclosed buyers, which my sources say are probably likely either Russia or working for Russia to build up this sort of secret oil navy. But your point in your excellent note, as always last night, was basically that we don't know what these compliance firms are going to do. I mean, we're here at the EU Commission, the capital of compliance. I mean, if you're an oil buyer and you don't fully understand the rules that are being written back here, you might say, you know what, don't buy anything, even though we need it, because we're not sure if we're insured or we're not sure if the financing, you don't want to get sanctioned by the folks back here.
Right. I mean, firms have paid millions of dollars for violating Western sanctions, for example, by being engaged in the Iranian oil trade. And so I think a number of compliance departments, at least in these initial weeks, are likely to lead with no. I mean, think about it, Brian. We just got the announced price on Friday afternoon. We're still writing regulations going into this launch today of this price cap plan. I think there's a lot of confusion still about enforcement, how it's going to be monitored. So again, I think we could have some initial dislocations in the coming weeks as compliance departments just figure out, what does this all mean? Can I still do business with Russia?
Well, listen, and this show is worldwide exchange, but we got a lot of viewers, obviously, in the United States as well. And all day we're going to talk about, yes, we label it Europe's energy crisis. But, Helima, the thing about oil and gas that you know more than I do is that this is a global market. And here's sort of where my mind is, and tell me either, Sullivan, you're nuts, or you're sort of going down the right path, which is this. Okay, call it 2 million, maybe 1.5 million to 2 million barrels, according to IEA, being not used by China, which consumes about 15% of the world's oil because they're lockdowns. So let's say they actually do sort of, quote, reopen and start using more oil. the U.S. is still selling about 1 million barrels a day from the Strategic Petroleum Reserve. That's going to wind down in a few weeks. Oh, and by the way, will have to be refilled. So what I'm thinking of in my little brain here, Helima, is that's 3 million barrels a day that we just to China, one being taken off market for the U.S. That seems like it could swing the needle dramatically higher in terms of price.
That's absolutely.
If they happen at the same time.
I mean, that's absolutely right. I mean, this is, I'm sitting in Washington right now. For the Biden administration, the timing of, a China reopening, winding down of the SPR, alongside, uncertainty about whether you can still take Russian barrels. Can India continue purchasing at current levels if they basically say we're not going to abide by this price cap? And so there's a lot of uncertainty about where this market is going. But the trend line this morning looks like it's headed higher for sure.
Well, you're in D.C. You can ask them. I'm in Brussels, which is the D.C. of Europe. I'm going to see if we can get some of these commissioners to come out and talk to us. Helima Croft, always a pleasure. You can't see it, but I'm moving around a lot because it is cold, which, by the way, is not good. Cold, bad, because that gas will just continue to draw down. Helima Croft, as always, love your insight. Thank you very much, Helima.
Let's now get back to Brian Sullivan, live in Brussels, Belgium, with a look at a busy day and week ahead. Brian, what's on tap?
Yeah. All right, we're going to wrap up WEX by wrapping it up and then looking ahead for the rest of the day and the rest of this week here. Of course, okay, so the main headlines happening today, and there's a lot happening. You've got, of course, the EU sanctions on Russian oil, they're kicking in. You've got the price cap of $60 for Brent, which is sort of theoretically kicking in today. You've got OPEC meeting yesterday and very quickly deciding they will continue their 2 million barrel per day cut. We know it's not 2 million, more like 900,000, but they are not adding production at a time that the world may need it. So there's a lot of oil headlines. Oh, and by the way, do we mention, Seema, that today is kind of the day that China decided it is going to start to kind of reopen and thus use more oil all on the exact same day. Very coincidental. Okay, so that is today. We're going to talk more about oil from Europe all day here on CNBC. Looking ahead to tomorrow, we talk about the U.S. role in what is happening here. And one of the reasons we came to Europe is U.S. natural gas, liquefied natural gas. I won't say SEMA is, quote, saving Europe, but the additional flows from the United States to here certainly helping to mitigate some of the pain, call it a Marshall Plan for energy, if you will. That's going to be tomorrow. And on Wednesday, we'll talk about the role of renewables and trying to wean off oil and gas forever anyway. Is it possible? And if so, who wins? Oil today, gas tomorrow, renewables on Wednesday, and I'll send it back to you.